Hello and welcome to Fin Business. We're at Cybos and I'm in conversation with Michael Moon from Swift. Michael, welcome on the show.
Good morning, Amal.
The first and foremost, the entire financial institutions all over the world have been challenged by the payment industry. Payment, specifically in the digital format, has revolutionized like there is no tomorrow. I would like to first take your perspective on what are the key trends that you are seeing globally in the payment market.
The first one really is it's an open world. And what that means is that you have services, banks, payment systems, they're all opening up.
Yes.
So they're exposing services to external providers.
Right.
It's an open future.
Yes.
The next part of the future is what we think will be pervasive is it's a fast and it's an instant future. Everything is being consumed on a real-time basis. The other key feature is that it's always on. Always available. It's a 24/7 world we live in. And then one of the other major trends is everybody is right in the midst of preparing for a future that is information rich.
Right.
Information is everywhere. So when you bring all of that back to the payments industry, you really need to be able to respond to those things.
Right.
You're open, you're fast,
Right.
you're 24/7, you're information rich.
Right. So, what are the modes of payments that you see globally? Because in India, it's not only internet transactions, it's not only about what you can say the mobile payments, it's also about biometric payments, it's also about QR scan codes or QR CANs codes or something like that. What are the modes of payments that you see in developed countries and emerging countries as well?
So I think one of the key features is that back to this real-time world.
Right.
At a domestic level, all of the payment systems and payment environments are operating on an instant basis.
Yes.
Economies of any major size are all instant. And this is a global theme, but it's also very prevalent in Asia Pacific. In fact, I think Asia has really been leading this development. So you have economies that range from India to China, Korea, Japan.
True.
Here in Australia and Southeast Asia,
True.
they all have instant payment environments, and where they started was really facilitating at an interbank level a credit transfer, so being able to move money between bank accounts.
Right.
Many of these environments are also looking at the direct debiting environment. They're looking to manage, for example, the mandates that support direct debit. They're introducing things like request for payment features. If you go back to the customer experience as well, it's about making payments more simple.
Right.
So the consumer experience is important. And you see in most of these systems, they're introducing what some people call proxy addressing.
Right.
So what that is actually mapping a mobile phone number, an email address, or in a business context, a company number, a tax reference number, for example, mapping that to underlying bank account numbers, which in most places in the world are pretty inconvenient. They're pretty hard to remember. So if you can make that simplification and allow people to actually use mobile numbers as the identification of the beneficiary address, then that's really helpful in simplifying that experience. If you understand then that you have an instant domestic payment experience and environment, the next natural step that people expect and businesses expect is that their cross-border payment experience is speeding up, and that's an area we're really focused on. The Swift GPI program. Have you heard about the Swift GPI?
Yes, I'm absolutely aware about it. But obviously, I will keep that focus on GPI also later. But if I ask about the country specifically into the payment sector, how is the trend specifically into the corporate sector, wholesale banking and retail banking? Who are more using the digital payment? Is it the corporate sector or it's the retail sector?
I think most of this has started in that technology that's enabled different retail and consumer experiences. So the prevalence of smartphone technology, that driver is really profound. Very profound in India, very profound especially in China. So I think that's where you've seen a lot of the start of this, because that mobile devices enabled these information-rich experiences. I think you're finding on the corporate side that people are starting to adopt this as well, but the exposing, if you like, of the services that you might have in your business take some time to kind of think about, well, how does that fit a mobile environment? There are
Right.
some industries it's well suited to as well. So we're starting to see it shift, particularly in the smaller medium enterprise.
Right.
There's massive opportunity in SMEs, right? Many small to medium enterprises, a small business of two people, they're not necessarily that financially included today, particularly in an emerging or a developing economy context. So there's a massive opportunity.
So I have a very important question.
Okay.
We have seen enough changes and challenges in payment industry. Developed countries are still using cards compared to what Asia and emerging countries are still doing. We are innovating a lot specifically into the Asia, whether biometric or scan code, internet transactions, and so many other stuff. What is the next big disruption that you see in payment industry in the next 2 to 3 years?
Tough question. I think the house answer for many people on that is I don't know, right? And there's a lot of wisdom in that answer, right? Very hard to predict. The best thing to do is to come back to these drivers. Yeah. So the next disruption will come back to things like I mentioned before. If you're most open, if you're fast, if you're 24/7, if you're information rich, I can assure you that will be part of the future. One other way to think about it is the types of problems that people have, and we engage with financial institutions and companies all over the world, and they come back to three main problems. And the first problem is they're all working out how to innovate and be part of that uncertain future, a future they know will be different. They don't quite know how it will be different, but they need to be part of it, and they need to be future-proof and future-ready. And that comes back to enabling technologies, investing in things like API technologies, making sure that you're working with international standards, but you want to innovate. The second one, which is really important, is that it's a non-negotiable requirement that this industry, and if you're moving money around the world and you're in payments, you have to be compliant, you have to be secure. Compliant and secure, non-negotiable. So that's there. And then you have to make money at the same time. So you have to be operationally efficient. You can have the best idea in the world, but you need to provide it at a reasonable cost to the consumer, and you need to run your business in an operationally efficient way. So when we talk to our customers, they're trying to make sense of these three things. They're not mutually exclusive. They come together. So you have to innovate, be compliant and secure, and you need to be operationally efficient as well.
Absolutely. Great. So now I come to my final two questions specifically on the GPI. GPI is a revolution in cross-border transactions or correspondent banking. That's what I'm listening from a lot of bankers and SWIFT people and also the financial experts. Could you please tell me how exactly GPI will smoothen the cross-border transaction process in like 2-3 steps?
Sure. So the first thing we're doing is we're solving problems that have been around in cross-border payments for some time. And these problems come back to the speed of payments. They come back to the transparency to fees that you have. They come back to the traceability of where a payment is. And they come back to, I mentioned earlier, information with payments. And payments in the past has been a bit of a dark void. You don't know how much the payment's going to cost you. You don't know when it's going to arrive. You don't know where it is. And in a world where you have an Amazon parcel that can be tracked through DHL or FedEx at every stage in the process, in the past you weren't able to do that with payments. So with Swift GPI, we're solving those problems. So we've sped up payments whereby banks that are part of Swift GPI, they agree to process money in an end customer's account on a same-day basis. They agree to provide transparency to fees. They agree to every payment to put a unique tracking reference. And we've been very successful. So we only launched in May of 2017. And we now have, last count, over 280 financial institutions that have joined Swift GPI. 80 of those are live now. We're really pleased to say that we have 10 banks in India that have joined Swift GPI, which is fantastic. So I think the India market will start seeing the benefits of Swift GPI. So it's something which is growing very quickly. We have 1 million cross-border GPI payments occurring every day. And there's one very interesting thing that I wanted to share with you as well, which is very recent on Swift GPI, and it goes back to the speed of payments. We set out to provide same-day payment outcomes. What we found when payments were being done live and in production on Swift GPI is they were actually happening a lot faster than a day. And half the payments on Swift GPI today are completed with money in your account
Yes,
amount.
yes.
So you can go to the ATM and get the money out, half in less than 30 minutes, right?
Wow,
so when we
interesting.
saw that, we thought, well, we're not far away from being able to do a real-time
Good.
cross-border payment. And we completed a test actually with 12 banks in Asia Pacific, 3 in China, 3 in Thailand, 3 in Singapore, 3 in Australia. And in this test, we conducted, for example, a payment from China
Yes.
to a bank here in Australia. And then we used the new payments platform, which is the instant payment system in Australia, to reach another bank connected to that system and put money in the customer's account. And what we recorded was the fastest payment was actually 18 seconds.
Wow.
China to Australia through the new payments platform and into another bank in Australia and into the end customer's account in 18 seconds.
That was the detailed one, Michael. And now the last question. Again, it's a very important question. The question is, when Titanic began its voyage, it did not know it's going to hit the iceberg. But now all the financial institutions know that they're going to hit someday. How are you going to protect your GPI so that you will not hit the iceberg and Titanic will smooth sail?
Yeah, I mean, the iceberg scenario is what you don't see underneath the water.
Yes.
Yeah? So it's important to keep your eyes open.
Absolutely.
It's really important to pay very close attention to all the trends that are going on. I personally pay a lot of attention to all the developments that are going on. As we said earlier, you can't know everything. The one thing I think we come back to is the thesis behind the way that we're doing Swift GPI is that the underlying technology in the Swift network is fantastic, super fast. It takes 2 or 3 seconds to move a transaction anywhere in the world. So I can pick it up here in Sydney, where we are for Cybos, and I can put that in Beijing or New York in 2 or 3 seconds, very, very fast. Payments still have problems. So you have these business process frictions. You have to manage compliance. You have to do FX and liquidity management. All of those things drag on payments. So
Absolutely.
With Swift GPI, we continue to target, together with the financial institutions that are part of the Swift cooperative, these business process frictions. So I think if we're able to continue to do that, and you get the benefit of the reach that we have with Swift and all of the connections and endpoints, so you have scale in the network, we're really facilitating a process of payments innovation at scale in Swift. And I see a lot of energy in our community staying true to that goal of fixing these process frictions in Swift GPI, and keeping an eye on the market, but remembering the assets and the capabilities and the reach and the capillarity of that network. I think our future looks pretty good. We want to be careful, but it looks okay. So.
Great, Michael. Thank you so much for those comprehensive insights.
Hopefully no icebergs along the way.
Yeah, let's hope that it will never hit the Titanic. Great. Thank you so much for talking to Fin Business,
Wonderful.
Michael. It was
Very
wonderful
nice to
chatting
talk
with
to you
you.
and see you again.
Thank you.
Thank you.
And thank you so much for watching Fin Business. That was Michael Moon. We spoke a lot about payment industry globally and also the GPI. Thank you so much for watching Fin Business.